It might be tactically on the short term, but I don't think long term. I think for you to see a true rotation out of growth into value, you actually need to see economic growth and acceleration and a little bit of inflation. And while we are seeing improvement in growth, we still have a long way to go, but we're definitely seeing better growth. Look at retail sales, NEHB, industrial production this week. Every week we're getting better data. Whether it lasts or not because of the closures is a big question mark, but we are seeing better growth. What we don't have is inflation, and that's what value actually needs to sustainably outperform growth. So for the time being, I think you're going to continue to see growth in value. As I mentioned, tactically, the stocks, the tech stocks, the NDX, they're all overbought, and they're very, very crowded. 20% of the S&P is FANG plus Microsoft, and they account for 80% of the returns in July alone. So that just tells you how concentrated it is. Maybe we take a breather. Maybe these stocks actually sell on the news, but maybe they give you an opportunity to buy back or add to on the weakness.
You think 10 brokerage firms raised their price target on Netflix despite the missed guidance. Jenny, you've been following this expectations theme. Do you feel vindicated here by the Netflix sell-off on the disappointment?
I don't think I'm quite in the position to be vindicated, but I'm definitely hopeful that the theme picks up and continues. What I've been thinking of in terms of expectations are there are a handful of companies out there where the expectations are that it's like a frog and a princess. They kiss each other, they move into a house, and they live happily ever, a castle, and they live happily ever after. The rest of, this is an exaggeration, but the rest of the market, my portfolio, there's a lot out there where the expectations are as if they've been thrown away, put in the trash compactor, put out for the garbage, taken away, and are about to be incinerated. So as we get earnings, I'm pretty excited to see those that have been thrown out be able to tell their stories, show life, show that they have growth, show that they have a future, show that they're producing earnings and real cash flows. I think this is going to be an interesting earnings season, and I do think Netflix was really telling today where they still had good growth, but it wasn't good enough based on what expectations were. Expectations are too high for a lot of the high growth mega cap tech companies.
Courtney, what are you seeing from institutional clients on the tech trade? And is this week the start of something bigger and longer?
Well, you know, it's kind of interesting. At Loop Capital, where we do just cover institutional investors, we're seeing folks actually trimming from a lot of the big tech names and really using them as an ATM, not because they don't believe that tech, as I actually think it has actually become a staple, not because of that or that they think that these companies aren't going to do well, but they're actually doing it because they have to reallocate. And so we're not seeing them trimming because of anything fundamentally driven. It's really because either they're trying to balance to a benchmark or they are needing to reallocate to some of their underperforming names, and they're using this as an opportune time to do so.
Are you doing that? Do you agree with that?
No. Fortunately, in my personal portfolio, I'm in a situation where I don't have to trim from the names I love. So like a Facebook, there's no way I would sell it right now, considering the only alternative is a Google. I would keep it as long as I possibly could, or other names in the tech sector that I do like right now. So, you know, whether it's a Facebook, a Netflix, anything kind of playing on this consumer work from home trend that we're seeing right now, I personally am not trimming from those names.
John, what do you make of the Netflix share price reaction and the broader underperformance of technology as a sector and the NASDAQ today? It's pretty stark, down more than 1% for the week, while the S&P is up more than 1%.
Yeah, and to emphasize exactly what you just said, 1%. 1%, most of us, you know, are happy to get a positive 1%. We're not real thrilled about losing 1%, but 1% isn't what most of us are tracking as far as when we're in these tech names. We're expecting much more than that. So I think this is a pause, Sarah, more than anything else. Netflix gave historic positive guidance for the second quarter. But of course, I'm not overlooking the fact that the stock is still down 6% or more because they missed dramatically some of those really optimistic targets that said they might add 5 million instead of 2.5 million net subs. So, you know, I'm one of the guys licking his wounds after Netflix. I am not out of this trade, however. I'm out there 3 months into the future in call spreads. So I'm still looking for upside here. yesterday when I spoke, Sarah, with a couple of the writers over at CNBC about Netflix and how tough this quarter is, we thought that, this might be the breakout. This could be the first time they break that fever or whatever that they normally get in the second quarter. Unfortunately, they didn't. But as far as broadly tech, just like Courtney said, Facebook wouldn't touch it. I wouldn't sell it, that is. I do own a lot of Facebook, own Microsoft, Apple. I think tech is just fine. 1% shouldn't scare people.